Hi, Tim Bigham back again this week for Delta Derivatives and Traders Exclusive, and looking at a market that really doesn't know what it wants to do here. Certainly at the beginning of the week when we broke out to fresh all-time highs on the S&P, looked like we may have a convincing breakout, but since then we've muddled along here, still clinging to old highs, but on low volume. Certainly this week with the three-day weekend coming up, I expect tomorrow to be really light volume, but be interesting to see next week whether this market can really convincingly take it higher on good volume, or if we drop back into that trading range once again. So with the VIX hovering in the mid 12 level, certainly options are getting cheap. So looking perhaps next week to go long some straddles out there, just looking for either a breakout or a pullback. This market is getting wound pretty tight here and options getting pretty cheap. I like that combination. Also, as always, using that RB Trader technology for option scanning to identify some more opportunistic trades out there. Beginning of the week had a big buyer of McDonald's calls, the June 97.5 calls. Implied volatility, which again is just another way to say the price of the option, shot up from the high 17s to over 20 simply because of the big buyer out there. I looked to capture that volatility, sold those calls, bought the underlying shares, have about a 38 delta exposure on that, just looking for that vol to realign and take off the trade. Also, Micron Technology saw big volume in this week's right at the money, the 2650 calls. Implied vol shot up about 4 points expensive to next week, so put on a very cheap trade there, paid about 17 cents for the May 26 calendar and got out of that today for about 22 cents, so captured some of that implied volatility, and we'll be looking to do more of that going forward in this kind of market environment. So Wendy's, we saw a big buyer. Over the past couple days on the June 11 calls, those shot up again rich compared to the July. So again, put on a fairly cheap trade there, just paid a nickel for that time spread, and really looking if I can get out anywhere north of a dime, be happy to do that. So until further notice, really looking for this market to kind of tread sideways. Airline stocks looking a little interesting. There's finally vol in the market on those. Some of the major carriers got taken down on news that the low-end carriers will be adding capacity. So American Airlines, I like the fact that that stock is down about 8% over the past 2 days, looking like it's putting in a little bit of footing here. So I'm selling out of the money put spread out in June, the regular monthlies. Stocks at about 43 bucks. I'm selling the June 40 puts, buying the 38 puts for about a 50-cent credit. So I'm taking advantage of comparatively high implied volatilities, rich option premium, and the fact that I'll be a willing buyer if American drops another, 5.5%, 6% from these levels. If not, I keep that nice option premium. So looking again for more of those kind of opportunities going forward, using some implied volatility analysis. Anyone interested can email me at Tim Bigham to get some research on this. So until next week, this is Tim Bigham. As always, keep those position sizes in place and those stops going. Take care.